A stock market correction could be baked into the cake at this point, at this stage in the game. We have had such a massive bull run recently. It's been unreal. Talk about overpricing everything. Talk about irrational exuberance. Okay, I got an article right here. A U.S. stock market correction in 2017 could be inevitable. The Dow Jones has closed on a high for 12 days in a row recently. That's the best bullish record streak in the past 3 decades. A 13-day winning streak in January. In 1987, we all know what happened later that year. The third worst crash in Wall Street history. That wasn't correction as much as a crash, but the next stock market correction could be far worse. There's no doubt that the fact that the Wall Street remains the brightest star of the international market, setting an umpteenth high. But what does the future hold? The concept that what goes up must come down is not just valid in physics. Sooner or later, the next stock market correction will happen, and it will look like a major crash. It might be premature to suggest a major correction now. The markets are flying because of the immigration ban. Military spending and protectionism have shown that Trump intends to keep his electoral promises. There might still be room for more records. But at the first sign that Trump's policies aren't working, expect a major market correction, if not a downright crash. Now, I want you to take a look at this chart. I'm going to bring it up right here. I'll move my head a little bit. Now, what we're looking at is bringing the chart up right now. I'll show you what we're looking at. Okay, the green line that I've drawn, this is a one-year chart of the Dow Jones Industrial Average, 1 year. And the green line I draw is the trend average upwards in the last year. That's the trend average, been going upwards. And then the red lines I drew are the last two corrections. Now, there was a correction. The two previous corrections went according to a normal corrective pattern. Right, the more or less normal. But this third red line represents a correction that was cut short. And where the black arrows are is where the corrections should have made it to. So the first correction should have made it to where the black arrow is, and that's where it made it to, and then it started to go up again. And then the next correction made it to where the black arrow was, and then it started to go up again. Now the third correction should have made it to where the black arrow was. Right? But because Trump got elected there, we see that upward trend there, see? And after the new year, right up to the moon, to that little peak at just above 21,000. See? And now it's dropped back a little bit. If we get a correction, it's probably going to, at the very least, make it down to that red line that I drew. In other words, it'll go back down below 20,000 if we get a correction. It should go back down below 20,000. Now, what I'm showing there, that is a correction that would continue on with a bullish trend, because it would still be following this green line here. It could correct that much and still be in a bullish trend and not break its bullish trend. So that would be a moderate correction like the last two corrections we've had this year. So it could still go back down below 20,000. What they're talking about in that article I just read is not a correction like I'm talking about here, which would be a mild, small little correction. They're talking about a huge correction, more or less a crash, where the whole thing would just bottom right out. I don't know how low it might go. So we have to keep our eye on this. I'm going to keep my eye on it the best I can and report to you guys on it. But let me tell you, if it really crashes like they're talking about, I'm not going to be the only guy carrying this story. Thank you very much. A like and subscribe, and we'll see you in the next article.